They don't want you to know this. Something shocking is happening right now, and if you have savings in your bank account, you might be in for a nasty surprise. Thousands of people have started receiving official letters from HMRC, and these letters could mean one thing: you might owe money. But why now? Why are savers suddenly being targeted? And most importantly, could you be next? This isn't just another warning, it's a wake-up call. If you have more than £3,500 sitting in your bank, you could be at risk of unexpected taxes. And here's the real catch: many people have no idea this is happening. The government isn't exactly broadcasting this information, but those who fail to act in time might face hefty tax bills or even penalties. So, what's really going on? Why is HMRC going after savers now? Could your retirement savings be affected? And most importantly, is there a way to legally protect your money before it's too late? David here, and in today's video, I'm breaking down exactly what these letters mean, who is at risk, and how you can avoid potential financial trouble. But before we dive in, make sure to hit that like button and subscribe so you don't miss out on any urgent updates that could save you money. Now, let's get into it, because what I'm about to reveal might just change the way you handle your savings forever. When it comes to money, especially savings, most people believe that keeping it safe in a bank is the right thing to do. You work hard for years, set aside some money, and expect it to grow. But what if I told you that just having money in your savings account could now put you at risk of unexpected taxes? What if the government is quietly keeping an eye on how much interest you're earning, waiting for the right moment to send you a bill? It's happening right now. HMRC has started sending letters to thousands of people across the UK, warning them about their bank savings and potential tax liabilities. And here's the scary part: many people don't even realize they owe anything. That's because this isn't a tax you physically pay out of pocket like council tax or income tax. This is something that happens behind the scenes, and if you're not paying attention, you could wake up one day owing money without even knowing how it happened. So why is this happening now? The answer lies in rising interest rates. For years, savings accounts offered barely any interest. You might have gotten 1 or 2% at best. But things have changed dramatically. Some banks are now offering 5% interest or more, and while that sounds like good news, it comes with a catch: higher interest earnings mean more people are crossing the tax-free limit without realizing it. Now, let's break this down in a simple way. If you're a basic rate taxpayer, which means you earn under £50,270 per year, you can only earn £1,000 in savings interest tax-free. If you're a higher rate taxpayer, meaning you earn more than that, your limit is even lower, just £500. And if you're an additional rate taxpayer, you don't get any tax-free savings allowance at all. That means every penny of interest you earn is taxable. Now, let's put this into perspective. If you have £20,000 saved in a bank account earning 5% interest, that's £1,000 in interest per year. If you're a basic rate taxpayer, that means you just hit the limit. But if you have even a little more money in savings, say £25,000 or £30,000, you could easily go over and owe tax without realizing it. And here's the kicker: most people don't even think about interest earnings when they check their savings. And that's exactly why HMRC is stepping in. The government knows that many people are now accidentally crossing the savings tax threshold, and they want their share of it. But instead of making a big announcement, they are doing something much quieter. They are sending out individual tax letters, and for many people, this will be the first time they hear about it. Now, let's talk about these letters for a moment, because this is important. If you receive one, it will likely come as a P800 tax calculation or a simple assessment notice. These aren't just routine letters, these are official notices telling you that HMRC believes you owe tax on your savings interest. But here's the thing: just because you get a letter doesn't automatically mean it's correct. You see, HMRC relies on data from banks and financial institutions to determine how much interest people are earning, but sometimes mistakes happen. They might include interest from a joint account that belongs to someone else, or they might miscalculate how much tax you actually owe. That's why it's absolutely critical that you check your own bank statements and tax records before taking any action. And speaking of action, let's talk about what you should do if you receive one of these letters. First and foremost, don't panic. Receiving a tax notice can be stressful, but it doesn't necessarily mean you'll be hit with a huge bill. The first step is to log into your HMRC personal tax account and check if their calculations match your actual interest earnings. If something doesn't look right, contact HMRC immediately and ask for a breakdown of how they arrived at the amount. Now, let's get into something even more important: how to legally reduce or even avoid paying tax on your savings. Because here's the good news: there are ways to keep more of your money without breaking any rules. One of the best ways is by using an ISA, or individual savings account. Unlike regular savings accounts, ISAs allow you to earn interest completely tax-free. And the best part? You can save up to £20,000 per year in an ISA without worrying about hitting any tax limits. That means if you have savings, moving them into an ISA could instantly protect your interest from tax. Another option is premium bonds. Now, premium bonds work a little differently. They don't pay interest in the traditional sense, but instead, your money goes into a prize draw where you could win tax-free prizes. And while there's no guarantee of winning, the advantage is that your money remains safe while staying completely tax-free. But what if you already have a lot of savings and can't move everything into an ISA or premium bonds? Well, in that case, spreading your savings across different family members could help. If you're married or in a civil partnership, your spouse might still have room in their personal savings allowance, meaning you could legally transfer some savings to them and reduce your overall tax liability. Another option that many people overlook is the starting rate for savings, which is a special tax rule for people with lower incomes. If your total income, excluding savings interest, is below £17,570, you could qualify for up to £5,000 of extra tax-free savings interest. That's a huge benefit for retirees or those on lower incomes, and many people don't even realize they're eligible. Now, let's address another important question: what happens if you ignore these HMRC letters? Well, ignoring a tax notice is never a good idea. If HMRC believes you owe tax and you don't respond, they could issue penalties and even charge interest on the amount owed. And in extreme cases, they can adjust your tax code, meaning they take the money directly from your pension or wages before you even see it. That's why the smartest move is always to stay ahead of the game. Even if you haven't received a letter yet, it's worth checking your savings interest now and taking steps to minimize any future tax bills. Because once the tax year ends, HMRC will review all the data they've collected, and if they find you've exceeded your allowance, a letter could be on its way before you know it. So, let me ask you, do you know how much interest your savings earned last year? If not, now is the time to check, because while HMRC might be watching your savings, you have the power to take control of your finances and make sure you don't pay a penny more than necessary. And if you found this information helpful, make sure to subscribe so you don't miss out on future updates that could save you money. Thanks for watching, and I'll see you in the next video. And this isn't just about tax. It's about protecting your savings and financial future. Many people are being caught off guard, and by the time they realize it, they are already facing unexpected tax bills. But the good news is, you don't have to be one of them. By taking action now, checking your savings interest, and using tax-free options like ISAs and premium bonds, you can stay ahead of HMRC and avoid unnecessary charges. But here's the big question: have you received one of these letters, or are you worried you might be next? Many people don't even know how much interest they've earned until it's too late. That's why it's crucial to stay informed and proactive. Let me know in the comments below if this has affected you. And don't forget, staying ahead of these financial traps is key to keeping your hard-earned money safe. Hit that like button, subscribe, and turn on notifications so you never miss an important update. Thanks for watching, and I'll see you in the next video.